Ladies and gentlemen, welcome to the big, oh no, it's not. No, it's the midday market monitor. Geez, I have to edit what I'm calling the show these days. And today is going to be a little bit later than the next few streams where we're going to be doing these mid-market day streams. However, it's going to shift over from 2, it's probably 1 or even noon. So it's going to get earlier and earlier. Just going to test out some different times. I don't know if I'll be doing the later evening shows this week. I may just be doing these streams and then maybe trying to put out some weekly videos. But hey, it is what it is. Hello, everyone. Good afternoon. Hello, hello, hello. Look at this. The only beacon in this long list of red today, Google up 3%, and actually retracing from 293 from where it was earlier due to the great and powerful Warren Buffett and, his large team at Berkshire Hathaway that ended up buying in essentially a $5 billion stake in Google, or now sitting at $5 billion, I should say. We don't really know what price they bought in at, but it was probably somewhere around $4 billion. But hello, everyone. Now, on the other hand of this market reaction is BMNR, down over 10% to $30.91. This has been the most disgusting bleed off I've seen in a long time, just over the course of the month, going from, essentially $55 down 40%, 41% over the last month. Okay, this is the reaction that crypto can have. It's obviously a very speculative asset. Tom Lee holds firm that we will be able to turn around on Ethereum. And in fact, we're going to listen to a little commentary from Tom Lee today. But yeah, this is a pretty strong reaction to the stock. Obviously, they are just trading as a play against Ethereum. Ethereum continues to fall. BMNR is going to continue to fall. So we will see. How aggressively do you buy the dip on the way down? That's obviously up to you and your risk tolerance. I've been dabbling, but nearly not as much as I was buying in the 40s, 30s, and my lack of cash is hard to continuously buy the dip at the levels that I potentially had bought in a little too early in the 40s. But, as I accumulate more cash, it's going to go into names similar to BMNR, but maybe there's a strategy that people on the way down are trying to hold on to quality names to secure things getting potentially worse in the macro. So looking to names like buying the dips in Google or Meta, Amazon, these sort of names are also finding a lot of my capital as well for whenever I am DCAing. Scam Lee took my money. I don't think it has anything to do with that. He's not controlling the $500 billion market cap of Ethereum. So Ethereum has fallen from 4,500 down to 3,000, and you're seeing a reaction of essentially a levered play on top of Ethereum. Now, the actual crypto treasury is not, losing much money. They have very few people that they're actually paying to run the entire crypto treasury. And then of that, if they needed any additional capital, they could stake to find that 3 to 4% to end up paying off all of those costs. Okay, so I'm not having any problem with BMNR. It's just a matter of whether or not you believe in Ethereum being the big, globally used blockchain for financial services, or if some of the stable coins and other companies in that space like Stripe and like Circle creating their own blockchains to facilitate stablecoin payments and potentially one day real world assets. But that said, let's go ahead and watch a quick video from the great and powerful Tom Lee and get some of his thoughts on the markets and crypto in general. Bear with me a moment. Let me know if you guys can hear this.
We're back on Halftime Report. I'm Leslie Picker with today's ETF Edge. The Bitcoin death cross has been stealing the headlines, but Ethereum, the second largest crypto, is also down almost 30% within the last 3 months. Joining me now is Thomas Lee, Fundstrat Global Advisors, managing partner, head of research, and CNBC contributor, on why he is still bullish nonetheless. So, Tom, tell us, you've got these monthly fluctuations. As you say, Ethereum is in a super cycle. What makes you stay bullish?
Well, there's the story of building on Ethereum, and we know that there is a lot taking place. There are stablecoin creations. Larry Fink and BlackRock and Wall Street want to tokenize assets, bring stocks, bonds, real estate onto the blockchain, and they have to find a neutral 100% uptime blockchain. That's Ethereum. And that's the fundamental story. The price, of course, for Ethereum will fluctuate because crypto is hyper volatile. In fact, it's kind of it's sort of a feature of the blockchain itself. And I think we've been in a downtrend, unfortunately. A lot of folks are kind of questioning if we're in a 4-year cycle for Bitcoin. So we talk about that in the chairman's message we published this morning, that the most correlated factor to Bitcoin prices when you see it at Bitcoin at a peak actually is the ISM. So I think we're still in a correction phase of crypto. Crypto suffered from that liquidation event on October 10th, but because the fundamental story is intact and we crypto discounts the future, that's why it's volatile, but it still looks pretty attractive here. And personally, I think that we're pretty close to bottoming this week.
Time for Ethereum, because you've got this general market risk-off mentality. So what are some of the idiosyncratic elements that we should be thinking about as it pertains to Ethereum in the meantime?
Well, Ethereum kind of has several ways that it establishes a floor. One is the value of all the assets locked onto the blockchain, and that number is growing. But historically, Ethereum bottoms when that ratio is about 50%. So I'd say we're pretty close to that level. That's why I think Ethereum probably is bottoming this week. But the other way to look at Ethereum is really its price ratio, or even its network value ratio to Bitcoin. It currently sits at, this number is 0.032. The long-term average, like the 8-year average, if we were just to trade to that 8-year average, would put Ethereum at around 12,000. So I think Ethereum is undervalued because, number one, the story is gaining relative to Bitcoin this year. But two, we're getting this sort of intrinsic floor because of the value that the assets locked onto the Ethereum blockchain.
All right. Tom Lee.
Okay. Yeah, that was some commentary from Tom Lee. Like he stated there, they had talked about this a lot from today's press release, in which they actually stated that they had purchased an additional almost 100,000 Ethereum, now holding 2.9% of ETH tokens. But most importantly, they also had increased cash once again to 600 million. Remember, this got as low as 98 million not many weeks ago. So building up that cash position, trying to make sure that they have some flexibility if they feel like the bottom is in, which he said, could be very close now. But yeah, so let's take a look at some of the comments that Tom Lee had said during this. Crypto prices have not recovered since the liquidation event on October 10th, and the lingering weakness has the hallmarks of a market maker or two suffering from a crippled balance sheet. It's not one of those days where I'm a good reader, I guess. We just figured that out. When a market maker has a hole on the balance sheet, they are seeking to raise capital and are reducing their liquidity functions in the market. This is the equivalent of QT, quantitative tightening, for crypto and has the effect of dampening prices. In 2022, this QT effect lasted about 6 to 8 weeks, and this is probably happening today. 6 to 8 weeks. That's quite interesting as well. We do not believe crypto prices have peaked for the cycle, and this is covered in our November chairman's letter. We look at 5 explanations for the crypto price cycle and conclude that 2 have very important explanatory value. Both of those suggest a crypto cycle top likely 12 to 36 months away. Yes, this is the break from past cycle behavior. It's a matter of whether or not you believe him, right? Obviously, he's made some very large price assumptions for Ethereum, and because it's literally going the opposite direction, not just staying stagnant, but going the opposite direction, people feel like we're so far away from even just getting back to 4,500 or 4,800, let alone trying to break 5, 6, or 12,000 on ETH by end of year. Now, I have to say, crypto does turn around extremely quickly in past cycles, and so I don't think that the possibility of us breaking new highs by end of year is out of the picture at all. Whether or not those new highs are as high as 10 to 12,000, that might be a little bit of a stretch, but the ability for us to break new highs and get back to 5,000 ETH or something like this, I do think is definitely within the cards. If, smart money decides that they want to, maybe it's through the Clarity Act, that they end up seeing a large reason that they can start pouring into Ethereum again. So I honestly, this cycle is not even that bad. Some people are saying we're dead. This is the end. This is a scam, essentially. I don't think it's that. I mean, honestly, in my honest opinion, Bitcoin feels more like having to believe in other people believing it, and then everyone's belief in this technology is what makes it truly valuable. Ethereum, you don't really have to be a believer in it at all for companies to just realize that, hey, you know what, we should use more of this because it's faster, 24/7, more secure, and like it kind of spells itself out just based on the utility of the actual chain rather than thinking that it's a store of value. It is just a beneficial technology versus the current rails that we're using. So I'm a big believer in Ethereum and crypto in general being, used more and more often. I think that as you start to watch the blockchain for things like, okay, what's happening in stablecoins or what's happening in real world assets, you see companies like, Robinhood starting to increase their amount of real world assets on chain. They're doing that by tokenizing stocks for European customers right now, but you could also see them do that for Canadian customers or Latin American customers or Asian customers, and bringing all of those customers on chain. Why go through the rigmarole of having to get individual brokerage licenses and tap into all of those markets individually for every single country or state whenever they can just roll out a crypto license, which seemingly is much, much easier to go global with, considering the pathway has already been set by the Bitstamps and Coinbases that are, in 100+ countries today already, allowing for quote unquote crypto, but that also bleeds into holding things like Apple stock or Tesla that's tokenized on Ethereum blockchain. Okay, let's see. Yeah, I don't know if I know where the floor for Ethereum is. I'm not smart enough to suggest. I always feel like those resistance lines are there until they aren't. The day that they break through, they go, oh, sorry, that wasn't it. So I'm not going to have any certainty on calling where the bottom for Ethereum or even BMNR is. It definitely could drop much, much lower than we are today. I mean, but if this is not a scary large percentage of your portfolio where you're concerned about this being down substantially over the short term, then you know what, you're probably sitting fine. Your healthy amount of your portfolio, if you're like me with a long time horizon, is still put into names like Nvidia or Shopify or Google or Amazon or these sort of names that you just know probably a decade, 2 decades from now will be much stronger than they are today, right? And that can especially be said by even less from the Nvidias, because I think people are still trying to figure out, where we go for the hardware side of the silicon game. But for names like Amazon, do we think advertising is going away, or commerce in general, or cloud computing? I think those things are only getting stronger over time. I don't even think there's many projections or bear cases to suggest that e-commerce or cloud or any of these things will be shrinking anytime soon. It's just a matter of how they potentially end up getting supply for GPUs or other services to suggest maybe there might be a cheaper way than going and paying the expensive cost for Nvidia. So I even understand the bear cases for Nvidia much more than I do the bear cases for a Google, a Meta, a Microsoft and Amazon, something like this. And that's sort of what I wanted to talk about as well today. I mean, as we know, and I tweeted about this, I'm not actually a big fan of Apple. However, I do see the long-term, very sticky nature of that business. Like, I really do. I don't think that Apple is dying anytime soon or anything along those lines. I just think their ability to find new avenues to produce additional revenue streams has been very hard for them. Services has definitely been a great one, but that's kind of come and gone. You can see here Berkshire Hathaway's ownership of Apple over time. Now, in terms of the actual amount of shares that they have outstanding, it has gotten completely obliterated. However, the positions of their actual equity in the Berkshire portfolio has stayed closer than I think people would have thought. You know, hovering around 50%. He doesn't want to get over 50%. It's actually the same person that, you know, I'm building my portfolio strategy around about not letting Nvidia surpass 50% of my portfolio, and I'll trim every last share that it gets above 50% because I think you have a lot of concentration risk at that point. However, now we're sitting at around 23% or 22.5% of Berkshire's total holdings being on Apple, continuously trimming down. Once again, lowered his stake by about 9, nearly 10% quarter over quarter. But end up rotating a little bit of that into Google. It's still a tech name. They've known for a long time. And in fact, we should watch a video. There's a very interesting video online of, here, wait, let me see if I can bring this up. This is from the long-term investor that ended up talking about this. Let me see if I can just pull up his YouTube video. I might get demonetized for showing someone else's content, but it was a great video, and I want him to get the credit for it as well. I just do want to play this. Let me see if I can find this. Is this okay? I want to show you this because this was some commentary from Buffett about Google back. I think the video is from 2019, and just some of his commentary and how he missed this name.
Another stock that you mentioned over the weekend saying you should have known it early on was Google, Alphabet, the parent company of Google, because you knew how much they could charge you when it came to Geico.
Yeah, here we were at Geico paying them $10 or something for every click. I mean, $10, and no cost of goods sold. I mean, and it produced results for us. That's why we paid them the money. So I had seen the product work. And I knew the kind of margins. I mean, I always said it's great to find something that costs a penny and sells for $1 and is habit forming. This doesn't cost anything, and it's very useful. I mean, if you're looking up auto insurance on Geico, you've got an interest in auto insurance. I mean, it's a very directed way of talking to people. So the real question in my mind, I'd seen Alta Vista before. I used to play bridge on Alta Vista and that. And what I didn't know was whether there'd be more entrants. I didn't know enough about technology to know whether this really was the one that would stop the competitive race and all that. But I should have done Google too.
You say that Silicon Valley and a lot of the things that happen there, it's not really your field of expertise, but you've been around and you've seen how a lot of things happen, particularly with how Washington can have an impact. The reason shares of Apple were down earlier this year was in part because of the iPhone, but probably...
Let's, I want to skip this because he ends up talking about Coca-Cola and not as much on Google, but Charlie Munger also weighs in on some commentary about Google as well in this video.
We avoided the tech stocks because we felt we had no advantage there and other people did. And I think that's a good idea, not to play where the other people are better. But you know, if you ask me in retrospect, what was our worst mistake in the tech field? I think we were smart enough to figure out Google. Those ads worked so much better in the early days than anything else. So I would say that we failed you there. And we were smart enough to do it and didn't do it. We do that all the time too.
Yeah, we were their customer very early on with Geico, for example, and we saw. I don't. These figures are way out of date, but as I remember, we were paying them $10 or $11 a click or something like that. And anytime you're paying somebody 10 or 11 bucks every time somebody just punches a little thing where you've got no cost at all, that's a good business unless somebody's going to take it away from you. And so we were close up seeing the impact of that. And incidentally, if any of you don't have anything to do in your hotel rooms tonight, just keep punching Progressive or something, and you're gonna. Don't.
I mean, honestly, this man will go down. I hope he lives a very long life. He already has. I hope he continues to live a very long life. But talk about a perfect reputation, extremely smart, funny. What a charismatic character. I mean, who doesn't love Buffett? He's the best.
Really do that. The thought just happened to cross my mind. But, that is, you've never seen a business, almost never seen a business like it where, and I think for LASIK surgery and things like that, I think the figures were, 60 or 70 bucks a click with no incremental, no cost. So, and I knew the guys. I mean, they actually designed their prospectus. They came to see me, and a little bit after the original one, when they went public, a little bit after Berkshire even. And so I had plenty of ways to ask questions or anything of the sort and educate myself, but I blew it.
We blew Walmart too.
It goes on. Warren didn't really want to talk about Walmart all that much. He was like, yeah, okay, let's go on. Let's not just talk all about our failures. But yeah, it's crazy. Imagine like Sergey Brin going to Buffett as they were IPOing and being like, hey, we got this new little tech company that essentially is just using our network to charge the most egregious costs on a bid-ask system. And it might literally, I think they might have created the best business model in history. I think search might be the greatest business model in history. And Buffett can understand advertising. I mean, that's not out of his purview. But just having passed up on it. And then there's been certain times in Google's history where they've been quite expensive over time. So anyway, they're officially in. Maybe partly how they ended up getting in was looking at some of these multiples over the last little bit and definitely looking into 2025 pricing on a PE basis. This is trailing PE, getting quite cheap for still that same business that is in advertising, same customers. Customers are growing, clicks are growing, impressions are growing. Yet it got extremely, extremely cheap. But he didn't end up buying in Q1, Q2. He bought in Q3. And it does look like it was potentially a different investor on the Berkshire team that might have made that decision. Real Matt Money. Tanner is the modern day Buffett with a mustache, not even remotely close. No, I'm never going to go down with Burke status or Buffett status, that's for sure. But I hope to be a modest investor for my own family's wealth, and that's the best I can do, and that should be good enough. We honestly don't have to hit that many home runs in order to make it, and not only be able to take care of our families, but hopefully, our family's family, if that makes sense. Okay, let's take a look back at BMNR because this is just getting destroyed. Honestly, I mean, at some point you just kind of have to laugh to yourself a little bit. Like, how the heck are we going through this poor of a cycle right now? And it can get much worse. That's also the problem. I don't know if there's too much holding Ethereum back. I know people talk about this $2,800 floor, stuff like this, but with crypto, we've seen some definite large sell-offs in the past. And that could happen again, that's for sure. Now, the technology of Ethereum is not just staying stagnant. I mean, it continues to improve over time. The amount of customers building on Ethereum continues to grow over time. And hopefully BMNR being a holder of Ethereum will turn around if we continue to see that type of build out. Now, the interesting part is that Ethereum is down on the day, roughly probably about 3% or a little shy of that. And BMNR is down 11. Now, that seems a little unfair, or maybe the worst investment out of the two. Why not just hold Ethereum if you're interested in Ethereum? But that same sort of volatility is going to happen on the other side, and we've seen it already. Whenever Ethereum is up 3%, you can also see that moves of BMNR being up, 11% on a really bullish day if people think that the trajectory or trend on Ethereum starts to turn the other direction. Tanner, where's the Christmas rally? I mean, I'm hoping for it, but especially in crypto, I think we may need to see the Clarity Act or something like this that might be a bullish catalyst in order to push it in that direction. Now, I'm pretty sure I had saved some commentary from, where was that? Sorry, Brian Armstrong was talking about the Clarity Act passing very shortly, if I'm not mistaken. We'll see what he has to say here. But yeah. Okay. Okay, sorry. I'm a terrible multitasker, and for the live streamers who can do both, like figure out what they want to talk about and also focus on getting the next story. Congratulations to you guys. You guys are built for this. I'm just trying to find good stocks and then hopefully fill you guys in with modest quality.
Yeah, well, we had great meetings with the Democrats in the Senate and on the Republican side today. And the good news is that there's strong bipartisan support and will to get this market structure legislation done. It's important for America, and the 50 million Americans who've used crypto want to see it get done. And so one date we heard floated was, let's try to get this markup done before Thanksgiving. I think that there's 90% of the issues are already aligned on and agreed, and there's draft text going back and forth, a lot of great cross-functional collaboration happening. That last 10% are the remaining issues, and everyone committed to get in the room together and work it out, and hopefully we'll see some draft text or get it out of committee by Thanksgiving. Yeah, well,
I mean, I think that's a great update from Agent 47, giving us some of these updates here, and hopefully he is right, and the Clarity Act gives some more clarity for Bitcoin and Ethereum. So, yes. Now, let's quickly talk about SoFi. This is my favorite, fintech name these days. SoFi continues to climb. Well, not climb so much today, but overall, the trend for SoFi, what needs to be also seen from this name is whenever you look to the other fintech names that are having quite the sell-off, SoFi continues to not fall below that, $25 mark and actually holding a pretty great range for itself. So, doing very well. That being said, let's talk about some commentary that's actually happening on the stock. Sorry, I'm seeing your guys' Agent 47 comments. They're making me laugh. Okay. Short interest. Are the institutions coming out bearish on this name? As we saw on October 15th, we ended up seeing short interest on SoFi almost break below 100 million total shares. But this updated for October 31st increased just slightly, bringing on 10 million more shares. Now, this is after the dilution. This is after many extra quarters. So the percentage of short interest is actually falling. Okay. But these 2-week differences did increase just slightly, but still nothing compared to what we're seeing on the actual institutional holding side. So institutionals that are actually buying SoFi, trying to hold it for the long term, continues to increase and actually seeing quite the leg up in November. So that's also quite interesting. November looking extremely strong, much higher than September and October here. What do you guys think about this? Like institutions are coming in. Retail doesn't want to buy SoFi as much at these prices because they, can't foresee the stock essentially going to 40, 50s, or 60s. But there's this weird range, like whenever a company is near its all-time high, that people think that, it's going to have a hard time pushing through and finding new highs, even though they have, every single day, a new high amount of total customers, monthly active users, more customers cross-selling onto more of their services, and the balance sheet increases, the way that they improve their models so then they can underwrite better improves. So inherently, stocks like SoFi and many of the financials throughout history have just improved over time. That said, I think once we get past the $32 mark, we re-enter that price discovery mode, and then people sort of don't feel that almost burden of gravity where people say, okay, now SoFi can end up looking for the price where it really deserves to be at. Now, if we continue to re-accelerate growth, which is even in guidance this time, that's going to be the biggest change for SoFi next quarter, is not only in Q4 are they actually guiding to some pretty insane growth. They changed their guidance on EPS from 31 cents to 37 cents. I don't think we've ever seen that type of change quarter over quarter from SoFi in all of its history. And then on top of that, their CET1 ratios are at like 20%. Capital ratios are extremely high. It's all looking very good for them there. So there's no worry about, if they can lend out more or if they're finding more customers for their loan platform business. That we already know because of a conversation recently from Anthony Noto that those customers are absolutely there. Okay, they're seeing more activity than ever. And in fact, they can't call as fast as the line is being rung for, inbound demand. So that's quite interesting. Now, that demand is going to skyrocket. Literally, the quote that Anthony Noto said was gangbusters if we end up getting 100 more basis points of rate cuts. Now, that could be over the course of the next year, next 18 months, something like this. Potentially it gets started by December 10th. There's a 45% chance of a rate cut, and I'm actually in that minority camp here, 45%. And then in the 55% camp, we are seeing no potential rate cuts. Okay. We will see. We'll see. But just know that little bit of hesitation on SoFi stock and much of the market is really hindering on whether or not rates come down, which lowers the cost of borrowing, and especially for financials that play with much smaller margin. Obviously, every 25 basis point cut is extremely important for them in how they shift and move in their business. So SoFi is obviously played very heavily as a macro play, and you're probably even going to see the short interest through November climb up even higher as those comments and the October CPI numbers that ended up not getting released. Those sort of things will obviously prove to increase short interest for SoFi as that uncertainty of a rate cut changed over time. This is just the start, by the way. You know what I always hear? That exact same comment every single time that we see a 0.5% drop. There's the doomsdayers, there's the people that always call for much, much worse. And then whenever we are in the worst possible case and we are in a bear market and it's a 20-25% drop, people say, this is just the start. These comments will continue to happen regardless of where we are in the cycle. And some may be right and some may be wrong, but honestly, I think it's more luck of the draw. Yeah. This is what the market does. And the longer you're in the market, you just realize that volatility happens. And as Warren Buffett said in that video that we ended up showing, he's not scared of bad news. He focuses on the fundamentals of those businesses and just makes sure that, he holds the quality name. SoFi is definitely a quality name. Yeah, once the market turns back, those people are nowhere. Dude, I'm not a screenshot guy. I don't screenshot things to bring it back in people's faces. I don't. It's just my lack of care. I don't care. Not here to say I won or anything like that. But it is so true. I'll even see people that are watching the video. You guys are watching probably right now. And only when SoFi is red do these guys come out of the woodwork. And then they watch the video while it's green and disdain. They They're waiting for these stocks that they had called at $6 to go down to 2. Now that they're at 26 and they're like, yes, it went from 32 down to 26. You know, you're $20 off where you told me to sell it. It's a long-term game. You know, I'm not here to rub it back in their face, but it happens every single dip. And we're going to do this. We're going to see these little dips on the slow escalator up. It doesn't happen, by the way, for each individual name. Some companies go into pitch darkness and never come out of it. But that's why we underwrite every day. That's why, you know, we do these live streams. It helps me look into the stocks that I have in my own portfolio. Top stocks that you've DCA'd into during this drop. I've honestly been buying a lot of new names. Meta's probably been the largest dip buy during this big drop. Allow me to buy into a quality name, new Mag 7. The older I get, I just realize that there's, you know, certain businesses that just win. Just like as you've seen some of these super investors recently buying a lot of Visa, that I heard this quote, I'm sure it's somebody in the chat that said it, that just like the older you get, the more you realize how untouchable Visa's business is. That's how I feel about Mag 7 names. The older I get, I'm just like, yeah, I mean, Google, Amazon, Facebook, Microsoft, these companies are going to be perfectly fine. I did buy a lot of Nebius, but sort of in one lump sum. I didn't really DCA that position. And I just started buying. Dude, the amount of hate that I got, I literally went and I said, okay, guys, I bought a teaser position in PayPal 2 hours ago. And then people said, how much of it is it in your portfolio? I was like, 0.1%. And then people were like, that's a joke. 0.1%, that's nothing. I'm like, yeah, I know. I bought it a couple hours. I'm DCAing in. Talk to me in a few months and tell me how big of a position I have. By the way, it's PayPal. It's never going to become a large position in my portfolio. It probably will never surpass 5% of my portfolio. But like, what does teaser position mean to you guys? Like, I just bought like a little bit. I am DCAing BMNR, but like I said, I've not been buying as much here in the 30s as I have in the 40s. Obviously, it's smarter to buy in the 30s. I'm just running out of cash, baby. You know? And then it's another thing of just how much of my portfolio do I want to buy into a speculative name? I don't want to dump my entire, you know, my entire cash position, which is nothing now. But anytime that I do get cash, I don't want to just go and put it into BMNR. Yeah. I bought a little bit of Axon. I've got a little position in Axon. I don't think, well, I mean, it may go private, but I think names like PayPal, if they continue to get cheaper and cheaper, and by the way, this is starting to get highlighted by some pretty big names since Friday, where people are talking about how PayPal has reached its cheapest valuation since being a public company. Especially on an enterprise value, they are by far the cheapest they've been. It's very exciting. Now, is the business exciting? So what I'm going to try to do over the next few weeks, as I've bought in a lot of dips and I can't help but buy a company that I really like or a deal that I really like. But then it messes up my portfolio allocation. Just like, if you were to ask me a few months ago, how do you build a portfolio? And then look at my portfolio today, I'd go, there's some things here that are wrong. I'm buying into lower conviction names. I'm dip buying. I'm taking advantage of some things. It's just, you'll see some trimming from me, and we'll talk about it as I stay live and everything. And, you know, we'll do these mid-market streams. But the names like Reddit and Axon and Meta and PayPal and what other tiny names have I bought into? Shark Ninja, these sort of ones. I've just expanded into way too many positions. And if you were to honestly ask me, like, which ones do I have the highest conviction in? I honestly probably could have just consolidated all of that into Meta, maybe, you know. But hey, I'm only human, and we can always adjust from those types of decisions. But yeah, no, I think I'm going to be perfectly fine on every single one of those names. I think they're all quality names, but I don't know. I always kind of deviate from the strategy, and then we retighten. We get back on the road, and then we curve out a little bit, and then we tighten again. And I want to be at around 14 positions. There was a thing that Bill Ackman's team had studied where they said diversification is maximal at 14 positions. After that, they don't see any real benefit. It only is diversification. But anything under that, and you do risk concentration on certain names. Now, I'm very concentrated on 3 names. Like, that is the truth. But I really like those names. So we'll see. Okay. Thoughts on when you think Meta will have a turnaround, holding a little more, but I would like in Meta right now. Those 3 names are Nvidia, Shopify, and SoFi. But by the way, I don't think that strategy is going to change all that much. I mean, I might end up, whenever I built my position out on Nvidia to more than 40% of my portfolio, it was not meant to stay that way. Okay. And I'll never let it get above 50. So if we do start reaching these prices that analysts want, the 260 pluses in the like price action over the next year, I'm going to be constantly trimming Nvidia because I'm just not going to let it get too large in my portfolio, risking some massive, technological breakthrough. Like who knows? China could come up with some new technology that just, potentially risks Nvidia's moat. So I don't want to ever let it get past 50%. I'll never let any position get past 50%. But what's it called? The reason how I got Nvidia to this position, and my 2 biggest positions, Shopify was actually 3rd. My 2 biggest positions were Nvidia and Tesla. And then I just completely consolidated my Tesla position into Nvidia whenever you look at the valuation and what they have in the short term for the next, 12 to 18 months. I would put all my chips on Nvidia right now. And that's nothing against Tesla. I do want a position long-term in Tesla. So maybe there will be a time where as Nvidia is running up too much, I may buy into a Tesla, but I would love it at like a $300 price range, something like this. Amazon's the only one I'd feel comfortable over 50%. Yeah, I mean, they definitely have a really, really strong moat. I mean, that's for sure. That's for dang sure. Yeah, the reason why I was looking into making a BMNR video, and I'm like, everything I'm about to say is the same thing that I've been saying every single day. It's just like nothing is happening or nothing is changing. And look on chain. Take a look at what's happening on Ethereum. It continues to grow. The percentage of total stablecoin usage on Ethereum is higher than ever, right? Like, I just have no reason to change my thesis on BMNR. It's just that we're potentially in a crypto rut, if you want to say. I put 50% of my portfolio into Google at 80 and held on for the ride. I mean, that is amazing. Congratulations. I mean, and talk about what an easy position to hold as well. Even at these prices, like, we're still incredibly cheap, and not to the broader market, but compared to the growth that they're actually putting up, you have like 15% growth on search still. And then the other aspects of their business are growing even faster. So it makes total revenue grow. What was it last quarter? Almost 16%, something like that. So if that continues to happen, search as the total earnings for Google continues to go down as a total percentage. So they're more diversified over time. And then they want to be an absolute front runner in artificial intelligence. And Gemini and all the comments about Gemini 3 look amazing. So, yeah. Ethereum broke the 3K resistance. We are cooked. Hey, I mean, this is why I don't look too much into the resistance stuff, because it's resistance until it's not. But you are correct. Ethereum is now 29.78, which is going to mean that BMNR is $30.54. It's a bloodbath. It happens. No one likes it. Only the people with cash enjoy it. And to those people, congratulations. You know, I ended up trimming a little bit of my Nvidia to buy Nebius, but that's because I did want a position. And whenever you look at the price of where we've been to where you're able to buy at now, I mean, to me, it seemed like an amazing deal for me to get in. But that's not going to be the same for every single name that we take a look at today, right? Isn't that crazy? 8Co Holdings somehow is up 10% today. BMNR down. 8Co might end up holding up BMNR. They only have I think a $40 million position, or maybe something less than that now. Yeah. Navan having, maybe one of the worst IPOs as of late, IPOing at a roughly $20 price range, maybe spiking up a little bit to $22.75, and then just nothing but bloody red since. It's unfortunate. The same actually was with Chime. They started out their IPO very recently, quite excitable, coming in roughly at $40. They ended up raising for the day, and then after that, it was just nothing but red all the way down. We started building a position in Chime at around $17, and I was able to get in a little bit in the 1650s area. So we're still green, but the market is just hating on everything right now. Please stop the pain. Yeah, I know. Honestly, to some degree, the best thing to do is walk away. This is what I like. And even, to some degree, the Berkshire Hathaway buying into Google is just realizing that, like, hey, in any market, I mean, if you're buying into quality, you don't have to worry about what the market is doing in the short term. Right? That is the benefit of buying Google here. They have probably the best business model that's ever been created. The market share specifically on search, not on the LLM side. That obviously is changing, but even Gemini there is growing quite well. And then they have all these ancillary tools like Workspace, which includes all the sheets and email and documents and all these additional tools that Gemini is just going to be able to plug in with all this data. YouTube as well, which is just such a proprietary advantage. And honestly, for the most part, not being seen right now, because the ability to, they're still very much text-based. So you're seeing much more learning on the text side than you are on the video side. But that's, they're going through that now. No Santa this year. I honestly think it's way, way too early to tell. I know that's crazy to say, but things can pop back very quickly, and they have already so many times this year alone. If you look back at the SPY or the QQQs, QQQs might be a little bit more of an exaggerated example over the last year to date. Let's just take a look. But there have been a few times this year alone where we have seen, well, not only pressures from Liberation Day and the Trump tariffs, but then many other times where we've seen these dips only to reverse quite quickly as people realize Nvidia's earnings are what, Wednesday after the market close. We'll be live to show off Nvidia's earnings and just realize if things go wrong and they like double miss, yeah, I might not go live for the rest of the week. Like, who knows? I mean, I'll be fine. I'm just kidding. But yeah, that'll be very exciting. And then depending on some of the commentary from Jensen, it could potentially save a little bit of the AI trade if they continue to think that the market is very bullish for what they have to sell. Only Powell can save us. You are correct, but I wouldn't undercut Jensen here. Jensen holding up the every single quarter, it feels like, the weight of the tech sector. And then every time he ends up showing off those nice big beats. Now, last time the quarter wasn't actually that great. The stock the market reaction in after hours for Nvidia was not great. Now, I don't remember how it ended up closing the day after. We can actually check that. Let's see. How can I find this? Last quarter, they ended up beating on revenue. I think this is right, by 1.3% or about $600 million. So they ended up seeing a surprise beat there. And post earnings, the market had actually gone down by 0.7%. Yeah. The market in the last 5 quarters has gone down 3 times. Q2 of 2025, 6%. Fiscal quarter, Q2 2025. We're actually a year ahead. We're a year in history for Nvidia. It's actually Q3 of 2026. But yeah. Nvidia's earnings will turn the market around. I think, or at least I hope so. Imagine he seems to wear it well, doesn't he? Jensen holding up the whole market each and every quarter. We also see Palo Alto's quarter going to have a lot less of an impact on the greater market, but still an important earnings to follow on Wednesday after market close. Yeah. First order of business, don't take advice from strangers in chat. Don't take advice from me either. But unless it's to tell you that, try to remain a little bit less emotional and not so reactionary to every small piece of news that you end up seeing. Maybe that might be historical good news or good advice. Any positive news will help. I'm not even sure that's true. I feel like I've seen a lot of positive news and the market just doesn't care at all. It will turn around, but it doesn't have to be now. I thought this was financial advice. Quite the opposite. Quite the opposite. Okay. Time to sell my kidney to buy more SoFi. You're probably okay without it. Yeah, we were up nearly almost 7% in the pre-market on Google. Now we're still seeing a pretty great day, up 2.7%, but the broader market, NASDAQ down 1.3%, the S&P down 1.25%, which is even on the day. Holy, I didn't even realize that we were selling off this hard just even during the stream. It's turned around quite aggressively just during the day. Opened up, we ended up seeing a range today of 673 to 663 just during the market, while it's been open. which is also why I'm quite excited to start this new show. So for anyone that's new to the channel here, we usually do a 7 p.m. Eastern Standard Time show. I honestly think I'm not going to be doing both. I think what we're going to try to do is do a show from noon to 3 every day, or somewhere around that, maybe 1 to 3 or noon to 2. I haven't quite decided if we need a 3-hour show. Maybe it'll be 2 hours. And then try to plan for more research, deep dives, and more studied videos each and every day. That I think would be interesting, but the midday shows are more fun to actually watch the market reaction to news and everything that's happening, like as the day is actually going on, right? Trump, White House official Twitter just said, Trump has proven economic formula, but it's going to take more time. Okay, let's see what other news. Amazon set the size of their bond offering at $15 billion. Yeah, that's quite interesting as well. And wait, let's check on Bitcoin and Ethereum. I have not looked at Bitcoin. Oh my gosh, 91,000. And Ethereum, 2983. That is a bloodbath. That is an absolute bloodbath. Trump destroyed the U.S. economy. I don't even know why I read that out. I don't have anything to say about those comments. Okay. Let's take a look. Let's just go through some of these names really quick. And then I don't want to end the show. I want to keep talking, but boy, oh boy, do I have to go to the bathroom really quick. Just a number one. I just got to go take a pee. But usually I don't pause my streams midstream. I might have to throw you guys into an ad break or something to distract you while I, go pee. Because I don't want to end the stream, but I am, to be honest, I'm putting on a brave face here. I'm struggling. Like, do you guys know how many of these jugs of water? I don't know how much this is. 32 ounces, 40 ounces, something like this. But I go through them. How often do I shave? Okay, you guys are ridiculous. Here, I'll put the market on. I gotta put on a little take a break thing. Okay, one sec. I'm gonna run a quick ad and then go pee. How do I do this? I've got. Okay, thank you. That was so very kind. All right, we back? Are we back? Are we back? Are we back? Okay. He's running and selling his portfolio. That was quick. I ran. I know. Okay. We are in fact not back. Okay. Let's go ahead and go through the market really quickly. Yeah. Okay. BMNR being one of the large losers, especially in the portfolio, down almost 12%. Guys, we are going to fall under $30 here. I think we might need to put a little order in if it falls to 30. I think that might have to happen. We're finding, once again, new lows still, 30.25. Let's hold that on pause, down 12%. Dell down 10% still today. Big Bear AI down 10%. This one, I don't know why it's falling. Gemini, obviously, as another crypto name, down nearly 10%. Coinbase, another crypto name, down 8.5%. D-Local, look at this bleed off, man. It's crazy what's happening. The payment names are getting no love because the stable coins, but then also crypto is getting no love. I'm shrugging my shoulders going, you know what, stable coins. Yeah. Okay. Rumble's down 8.6%. Didn't they Rumble got some crazy deal or something like this with what was it? Was it Perplexity, or it was some crypto name, or not crypto, some AI name, right? Didn't that happen? Or maybe I'm thinking of Snapchat. What am I thinking of the recent Rumble news? Was there anything? The Q's lost 600. Oh no. Wow. Where's Nvidia right now? Nvidia 184.50. That is crazy. Yeah, extreme fear right now, we are sitting at, let's go ahead and check that. I mean, it's going to be extreme fear. It's just a matter of where. 14. 14 on extreme fear right now. Here. 14. That's pretty freaking low. It's not the lowest I've ever seen. I mean, during the Liberation Day, I think we got down to 4 or even 3. Like, it was crazy. I mean, that was I don't know. For me, whenever I see it that low, those are screaming buying opportunities, in my opinion. But, you know, you don't have to follow me into those. Ethereum is at 2,983. Block is down to 58. Where is PayPal right now? We're at 61.45, the cheapest we've ever seen the stock nearly in history on an enterprise value, even on a market cap basis. I mean, it's extremely low. Then whenever you look at it on a multiple of their earnings, which has continued to climb over time, if you continue to think that they are going to compound over time, find new customers, increase their offerings, then could be a more value pick in the portfolio for some. It's definitely not the growth name that you're going to find. They're not trying to compete on revenue growth of the names of the Nebiuses and the CoreWeaves of the world, but they're going to try to continue to grow over time, and EPS especially growing, so then they can buy back more stock, issue that new dividend, and increase total shareholder value per year. Okay. PayPal in the 50s soon? Well, I mean, they can be in the high 50s today. that can happen real soon. But yeah. We will see. Apple down 2.3%. Grab is now $5.28. I mean, that is extremely cheap. We're starting to get some pretty good pricing from where we were before. Granny Shots ETF, $24.15. They just recently acquired SoFi, put that in the portfolio. Is Nebius up? They definitely did a huge sell-off. Yeah, 1.4%, but not nearly where we were at one point today, almost breaking through $90 per share. Figure is also up. This has had quite the last week. Ended up showing off earnings, great beats for Figure, and then that's carrying on into this Monday. C Limited also shown off earnings. I think that was over here. I don't remember. Did the numbers miss? We can check that pretty quickly. But C Limited is a pretty interesting name. They beat on revenue and they missed quite largely on EPS. So that's really what you're seeing there. Yeah, they missed on EPS by 32% while beating on revenue by 4%. But a little bit of correction in the stock after essentially bottoming here in the last week at 132. Fair Isaac Corporation also climbing today. Tesla's up today, 407. What price allows you guys to continue to buy into Tesla? Are you buying here or are you wanting much lower? There's a lot of names facing some pretty severe red today. Hood down 7.5%. Remember, this is always going to be a very levered bet on the entire market. So if you're a believer that this bear market's going to continuously get worse and potentially people even lower the amount of volume that they're potentially trading on the platform, Robinhood's going to be a big player in that. And a lot of the times the dip purchases that end up coming in are from smart money. In April, it was very much a V-shaped recovery because of Liberation Day that, retail was very easy to buy up those dips. But with, longer, less V-shaped recoveries, more sitting in that trough, that retail does end up seeing these sort of, bearish fatigue. They do not like sitting in red for too long, and people end up saying, hey, you know what, this is a rigged game. This is not something I'm enjoying anymore. I'm no longer seeing the upside. It's all manipulated and against me, and we're losing. And then they get sick of it and end up dropping. If you can find your way to the other side of that, I promise you, quality names that continue to fundamentally strong names end up finding new highs. That's been a truth throughout all of stock market history. Okay. A name like Hood is going to be very fundamentally tied to where the market is going. If the market is not as exciting as it was a quarter before, they are going to potentially have a very hard numbers to put up for Q4 of 2025. October, they already showed off numbers, and it was by far the greatest the greatest month we've ever seen. I mean, so unbelievably great. But is that going to translate into November? And then are you a believer in the Santa Claus rally? Is it going to continue into December? Because if it isn't, you think we're in a little bit more heat. Maybe inflation's getting a little bit worse. Maybe the Fed doesn't cut. Maybe they don't have enough data to cut. Does that end up meaning that stocks are going to find, potentially newer lows? Amit would absolutely not disagree with that. I've got a podcast with Amit talking about Hood every single day, sorry, once a week, not every day. But we talk every day, and he is a big believer in Hood. So am I. But they are tied to market performance. They are. I think the important thing is, and the reason why I continue to hold through Hood, going from 150 down to 110, and legit, look at my face. I don't care. It is not even bothering me in the slightest, because the honest truth is that we need to judge this company's performance not based on the amount of volume that's flowing through their network, which is something that we cannot control, but the market share that they take in good markets and in bad ones. Because if they continue to get new customers during bear markets, Those customers are very sticky, very active traders, people that can trade through every single environment. Those customers will be there whenever the market is good as well. Okay. So they ended up showing off a slide in the most recent quarter that ended up talking about their market share gains throughout the years. They need to keep showing off that, even if it's poor. Okay. Because then that would be the best judge of how well they're doing. And if it's not good, then it might not be the buy. But yeah. They're tied to sports betting now. I think that's great. You know, I've got no problems with that. Honestly, I mean, maybe some people have some concerns about that, but they're not forcing you into making those types of picks. What they need to do is have a toggle to allow people that might have a problem with sports betting or something to just not have it on the app. Okay. If people do not want that to be associated with their brokerage, there should be a way of turning it off or not even showing up on the dashboard. That's very fair. Okay. But for the people who do like sports betting and are not quite into investing, they should have an avenue to go towards Robinhood that is and has proven in multiple vectors that they have extremely great ways of lowering costs and having the best UI. Why would you go to, I was going to say DraftKings, but why would you go to Kalshi or Polymarket or any of these services if you believe that Robinhood would have more products at lower costs and everything like this? Right now, that's not going to happen because they use Kalshi. Hard to beat the technology provider on price than the actual, company itself. But they don't always want to be working underneath Kalshi. And they've made that very clear from one of their last fireside chats with Stephen Quirk, where he said that they could be building out their own service. It is in the hood way of potentially partnering for now and then building out internally. And you know what? I've had a lot of success with companies that do that. Look to Shopify. Shopify works with and has a very huge application marketplace where a bunch of, third-party companies can offer their services through Shopify to standalone merchants. And then eventually the ones that are extremely successful, and Shopify won't admit that they do this. I'm not trying to defame them here or whatever, but they end up putting out their own first-party services that look a lot like the ones that are built third-party on their platform. Because why give them any piece of the pie whenever you can build it internally? Microsoft does it too. Any of these app places, Apple does it too. There was a time before where you needed your own standalone weather app and fitness app and all of these things, and then they slowly just build Apple products that look a lot like the top players that are doing that on their own app stores. It happens. Meta below 600 is wild. Yeah, it's true. Steve said this is one of his largest positions, if not his largest position, and he's only going to continuously buy in if it gets down to 550. Could be interesting. Robinhood made a casino app. I think the day trading and active traders and all those things that takes on the exact same risk. If you want to have long-term investing on Hood, you have all of those tools still. Even I bought Meta, said Matt Money. I have a small position in Meta, but it is growing. I hope it gets up there with the Googles and the Amazons. Honestly, those two positions, I built Google out first whenever I realized just every single aspect of artificial intelligence and what makes certain models much stronger. Google has every aspect of that, way more than ChatGPT, way more than any of these other services. They lower their cost to serve with, the cloud base that they have. They make their own TPUs, which could potentially help with costs going forward. They have the insane distribution, both on a consumer and enterprise side. They have just the largest set of data through Google and YouTube and all the other businesses that they're in that allow them to just have such a data advantage. They have everything that you need. So Google inherently was going to win the race. I believed that. Amazon ended up getting really cheap around the 212, 213 area especially. And we're like, what is going on? There are people forgetting they have the biggest cloud business in the world. and they have proven, I was going to say decades, not decades, but a decade of experience of setting up data centers. This is their bread and butter. I mean, better than anyone else. So they're not growing as fast as the other names, but also, like Andy Jassy said, they're starting at much smaller bases than AWS. So it's very hard to scale at the size that they're growing, or at the total market share that they have. But still, they are growing, and that growth is actually accelerating. So I think it was the highest growth in the last 11 quarters, if my brain is serving me correctly, for Amazon. And now I just feel like this history is just repeating itself for Meta, as once again we sell off one of the greatest names. Like they just put up $50 billion in this last quarter. If I'm not mistaken, growth accelerated, and everyone looks to capital expenditures and a tax bill. Like, people don't want Meta to pay their taxes and say, oh, you know what? This company for the long term is not worth as much as it was before. What are we talking about? Advertising is only getting stronger. They're using artificial intelligence for every aspect going forward, and now they're getting into the hardware game. It's like, why Apple is so sticky is people are like, oh, the hardware is like, the switching cost is very, very hard. Yeah, well, wait until Google users with Google search start getting pixels. It's very hard to switch off. Wait till the Meta users that are starting to do more with Meta end up getting these glasses that might be very hard to switch off. Like, I mean, they're building deeper moats, and people are punishing them for spending for the future. That's how these companies and all startups and all growth investments have gotten to where they are in the first place. They bet all their they pushed all their chips and said, here, I'm here to play, win or lose. And Meta's not even proving that they're losing. There's no signs to say that they're losing. They're just mad that they're pushing the chips. It's crazy to me. So I remain bullish on the big names that continue to make big bets, are doing their own research. That's very exciting to me. And you know what? If we are in a bad market, is there any place that you'd rather be than a flight to quality? Like, I would want to be in these types of names that have fortress balance sheets. Jamie Dimon sort of coined that phrase, the fortress balance sheet. But now you're actually seeing it at large tech companies. I mean, the fortress balance sheet's been hit a little bit, ever since they've been buying from Nvidia. But for my portfolio, it's actually kind of in the favor, being, that the heaviest position that I have is Nvidia. So I'm actually benefiting on a little bit of the fortress coming down. I'm buying the company that's selling the catapults, I guess. Who knows? But yeah. Let's quickly take a look at Meta's capital expenditures over time and total growth rates, for which it's just insane that, some of the biggest companies in the world, like Meta, is growing at 26% year over year. I don't know. Maybe I'm crazy. This is Fiscal AI's, just looking at their quarter. We don't have to look at the last decade, but, from September to September of the last 3 years, they continuously climb up in total revenue. Now, September has even done more revenue than what they did past December. And now next quarter is December. So that's the holiday season. That's peak advertising. That's where all the sales happen. And yet they are having accelerated growth rates into that quarter. I don't know. What are we worried about? Reality Labs? Are we worried about capital expenditures? Capital expenditures, and we can look at this over the last little bit. It's definitely increased. Like, I'm not denying this. And then what else can we look at? Capital expenditures. Isn't there a CapEx per share? CapEx per share. I mean, yeah, they're betting on the future. It's happening. But honestly, I'm here for it. I also, wow, what was that? I don't know. Let's look at it through CapEx and then CapEx common size, which is just a percentage of revenue. Yeah, I mean, it's a negative number, so it's not going to look great, but essentially 36%. Pretty crazy. I don't know. I'm happy that they're betting on the future. Gross margins are staying nice and high at 82% plus. I think it's one of those things similarly with SoFi's, tech platform is Anthony Noto said a lot of what you see from the tech platform, you are not going to be able to recognize because it doesn't show up as a profit and loss, right? But we are building all of our tech in-house, and that allows us to deploy even faster. I think that's what AI is. Everyone wants okay, where's the artificial intelligence line item on these companies' spending? I don't think it works like that. I think it's just, hey, look at advertising. Look how much they are growing in terms of year-over-year advertising dollars because we're getting more efficient at targeting. How are we getting more efficient at advertising? Artificial intelligence. And I think this is happening across the board. It's how warehouses are getting more efficient at Amazon through Deep Fleet, allowing robots to end up seeing a more efficient path to get from point A to point B through artificial intelligence. It's allowing routes to be selected for Amazon drivers more efficiently. It's allowing for, essentially every single thing in a business's workflow from A all the way to Z. And there's no line item saying, hey, this is how efficient that we've gained through artificial intelligence, but you're just going to see it in the margins. You're going to see it over time. And so these companies are going to put up great growth rates, but alongside that is going to be high capital expenditures because they're not just betting on today's growth and today's models, but tomorrow's and in the next years as well. Noto said that they are seeing a lot of problems in the consumer. Like he said, he was not blind to what's happening to other businesses, but he said it's not happening at ours, not at all. So the jobs data is very different than the, highly professional, high FICO, high earner customer that's on SoFi. And also they underwrite via cash flow. So, it's not just the same way as what you can pull from the data as well. Noto used to bully me in high school. To some degree, I do think that he was that kind of guy. Not a bully, but he was like the, high school football captain dating the cheerleading. What's the head of the cheerleaders called? I don't even remember what that is. Yeah, the guy's an alpha. Now he's a total nerd. He played football at West Point. He's like the opposite of a nerd. The dude was like a captain or something. The head woman cheerleader. Head cheerleader. Yeah. He was warming the bench. He was the captain. There's pictures of him like number 96 or something like this with the C on the jersey. Cheerleader leader. Okay. Okay. Well, is the elevator down or escalator up for a day cause? Oh, okay, let's check the markets. Let's see if we're seeing any sort of bounce, if that's what you're suggesting. Maybe. We broke underneath the the 600 mark on the Qs and 662 on the SPY. It is pretty incredible, eh? Gosh. S&P 500 down 1.2%. And this is on the back of the last, little bit, seeing sort of day after day after day, seeing these pretty bloody red days from the SPY. Happens. I actually didn't mean to pull my face up. We'll go back. JP Morgan down 1%. Fiserv finding even newer lows. This is the last 1 month chart. They were at about 128. And even if we go back even further, you could find they're at $240. And now the stock's at 62. That's what Fiserv's doing. Absolutely incredible. Copang down 1%. Microsoft's down 0.8. Broadcom down 0.6. Iren's only down 0.5%. Iren sitting at 46. Yeah, some of these neoclouds have bled off, eh? CoreWeave going from just on the month. Well, actually, we'll look at the 3 months for the last, or the neoclouds. 153.20 down to 72.55. Now they're at $74. Nebius. Oh, I can't spell for crap. Up 1.6%. 141 to 84.86. Cypher Mining. 25.52 to 14. And Iris Energy, Iren, 76.87 to 46.07. That is quite the changing theme, eh? Just take a look at the quantum names too. Ford is down 3%. D-Local is down. Yeah, I've not changed my stance on D-Local at all. This company is phenomenal. The quarter was phenomenal. And we just saw this massive sell-off. Absolutely insane. But, nice little bounce from 12.46. Like, so cheap, man. So unbelievably cheap. Okay, so guys, really quick, because today was a little bit different of a day than we're normally going to see. It's just a Monday. I think we're going to start these shows at noon, probably go to 2 or 3 p.m. I think this is going to replace the later evening shows. Not sure yet. Obviously, I will go live if there's some striking piece of news that we end up seeing. But it's just, I think, a better time during the market open, see a little bit of the performance in these companies as the day is actually happening. It's a lot more fun for me to do this. And I'm home. Like, why was I waiting for 7 o'clock? And I'm home anyway. So this allows me to sort of have my night with my girlfriend instead of the mornings. Ladies and gentlemen, thank you all so much for watching. Really do appreciate your time. But bye for now.